Howdy, everyone. This is Tyler Coates with the inaugural live stream for alphanalysis, which is the new website that I just launched and am very excited about. It's just at the beginning stages right now, but I've got some big plans for where that's going in the future and am really excited about anybody who's going to be a part of it at the beginning stages, and also the other things that that's going to, motivate and incentivize me to do, such as this daily live stream. So something I've been excited about for definitely weeks, maybe months now, is to really roll my sleeves up and get back into the trenches of streaming daily. I have been having a lot of fun with Fibbo Swanee and Joe Saz on our weekly Thursday stream, but I have definitely felt like there's a need to get back into doing it daily with all of the volatility that we have seen. I was very motivated on doing streams kind of throughout the bear market to kind of be there during what I consider to be the most important, turning point of the market, or just the most important test. But what I've really realized since then is just how much more challenging the bull market phase is relative to the bear market phase. When you're in a bear market and it's a market that you really believe in, like Bitcoin, what's probably going to happen is you're going to be really excited to buy the dips during the first maybe 20-30% of the bear market, and then as it keeps going down and down and down, you then basically give up on buying the dips. But you probably don't give up on the hodl if you are somebody who is really convicted in Bitcoin and where this thing is going in the long term. So therefore, that next year or two is just kind of a period of I don't want to necessarily say complacency, because that's not how it is for everybody, and that's definitely not what it should be, but a more period of not caring. You just kind of lose interest. I'm not finding the word apathy. You kind of get apathetic, and therefore, the streams that I was doing maybe didn't really have the value that I thought that they would. And if people are out of money to buy, and they are just in a spot where they're just kind of sitting and waiting for what's going to happen next. And as I certainly didn't call it perfectly throughout the bear market, I really do think I called it just about as good as anybody else did publicly on TradingView and Twitter. So that was something I'll be very proud of. It's there in in permanence. It's there and it'll be there forever, and that's something I always get to look back on, all the various calls that I made throughout the market, and specifically getting to prove emasar and the signals that were coming from that has really been really exciting for me. But I was really left questioning, where I wanted to go with YouTube. And for those of you that are just here for the charts and everything, I will certainly be getting into that. But with this being the inaugural stream, I want to start out with a bit of a summation of where we came from and where I'm planning on going, and then we'll definitely be getting right into the important stuff. So I am was in a spot where I really had to question my motivation and my passion, and my real desire for continuing along, just maybe doing what I would kind of consider the bare minimum, a weekly stream to just keep everything updated and kind of keep the train rolling. But it was that something that I really wanted to do more. And when I got into the streaming, I really kind of fell into it in the sense that I was working with Tyler Jenks, and he'd asked me to do some streams, and I was really excited about it, and obviously was not going to say no to that opportunity. And then after he passed away, I had gotten a lot of requests from people to keep doing streams, and that really was touching. I mean, it was all the people that reached out and added me and liked tweets and stuff that were asking me to, continue the streaming myself was truly special, because here I thought that, everybody was there for Tyler, and I'm just kind of an assistant basically, and and was very happy to be that. But once a lot of people asked me to continue, that really touched me, and I, went right ahead and did that. Just kind of hit the ground running without really, taking the time to ask myself why I was going to be doing this outside of, some kind of more selfish reasons, just really wanting to get my name out there, get to meet people, get to make connections and that sort of thing. And then once the followers stopped, kind of reached a plateau or whatever, I really had to ask myself, is this something I really want to work on? And the resounding answer is yes. And I'm really excited about where this is going to go, because really what I'm here for is you guys. And even if there's, one viewer, 5 viewers, if there's, a couple people out there that I can help, that could end up making the world of a difference. For example, the first student that I taught has already taught multiple students himself that have become profitable. And that sort of butterfly effect of just being able to provide a little bit of value, or maybe a lot of value, to one people or a lot of people, then if they pass some of that down, as I'm kind of hoping to do from Tyler and from what he taught me, that's I think something that you can't really quantify, and something that you just have to do the best that you can, and know that the message you're trying to deliver is going to get across to people that are there to listen and to work and to get after it. And therefore I am really excited to kind of turn a new leaf, in terms of, in the past I had always shared, I'd say like 85% of the stuff, and kind of kept 10, 15, 20% maybe for private webinars, maybe just I don't want you to know exactly where my orders are and exactly where my stop losses are. And that's, I felt like, was on the spectrum of most people maybe kept 50%, or you really had to wonder what if they were sharing 100%, if it really worked, that sort of thing. I felt like I was really, being more open and honest than anybody, basically as anybody that I saw out there, and was really comfortable with, sharing a lot, but not everything. And now, after I've kind of re-examined my morals or re-examined my motivations, and realized that that this is something I really want to do with my life, and therefore I want to do the best that I can, and I am no longer going to be really worried about holding back too much. Of course, maybe there will be some things that I keep for paid webinars or that sort of stuff, but in terms of what this show is going to be about, is me sharing everything, being like 100% transparent in real time of where I'm setting my orders, where I'm buying, where I'm selling, where my stops are, and what percentage of my bankroll I'm putting in. So outside of that, if I say that 30% of my roll is in Litecoin or Bitcoin or whatever the case may be, then that tells you all the information you don't need to know the dollar amount. That part is irrelevant, as long as you know how much of my bankroll is exposed, and then where my stop loss is set at. Then you know exactly how much of my bankroll is being risked, which I will be going over with in real time, as well as sharing all of the rules, like the reasons why I'm going to be setting my orders where they are set. So really excited to kind of really reinvigorated to not only get back into the daily streaming, but to really do the best that I can to share what's helped me. And from there, my hope is that people will learn and be able to implement things for themselves and figure things out for themselves. But what I've realized is that not everybody's going to do that. Only 10, 20, 30% of people are really either willing or able, based on time or whatever the case may be, to actually put in the time and effort to learn to how to set these orders, where to identify them for themselves. And the other people that are, in the rest of that category, I have not cater to it all. I've always really tried to shy away from spoon feeding, and I have always done my best to make sure to really prod people into learning for themselves, and even sometimes like kind of staying away from providing analysis important times, just to be like, huh, I wonder, who's really needing this right now and what they may learn if I don't post this. And after further, thought and consideration, I realized that not everybody's going to learn how to trade or invest for themselves, and that throughout his, in the past, you had CNBC, Fast Money, you had you had these people, Jim Cramer, you had these people online or on TV to go to and to hear them talk, and then you'd base your decisions on that. And if in the future or in today you have better advice, you have good, not advice at all, but you have real traders providing real commentary in real time, and offering exactly where their entries and exits and stops are set. The person that is always going to follow somebody no matter what, maybe now in the future they will be able to do a little bit better than they were on CNBC, Fast Money, whatever the case may be. So with all of that being said, I am going to be doing my best to keep an eye on the chat. Obviously, keep an eye on the price, 48,500, and going to be getting into the charts in a few minutes here, but going to start out with how I always used to start out my prior streams, kind of just sharing what's been going on in my life, giving a quick update about, just things I've been doing. And that's something I always liked. And something else I'm going to really be making a point of is to kind of just touch on the philosophical side of things. It's because it's like just what's most important, what's most interesting to me. And B, I've just noticed that that's something that seems to resonate well with the trading and crypto audience. And so that being said, start out by sharing my shirt. Got Hermes Trismegistus as above, so below shirt on today. So that's some pretty sweet action if you ask me, but not nearly as sweet as the action we're getting ready to share right here. So 1 second, I'll share my screen. So I'm going to be starting out today's show with a bit of a brag, and that will be the new car that I'm riding in. I guess I didn't get the best shot because you can't even see what the heck it is, but you can see my big shit-eating grin there in the driver's seat with my bandana there, American bandana, which I am very proud to be wearing around. So picked myself up a 2020 Mercedes GLA. It's a 4-cylinder turbo, all-wheel drive. It's kind of the half SUV, half sedan. It's exactly what I was looking for, and just as cherry as could be. And I got to tell you what, it's an absolute dream come true. This is something that I've been wanting for a long time, and actually specifically visualizing is owning a Mercedes. And that was something that the first time that I had the real vision and idea and belief that I was going to work my way towards owning a Mercedes was when I was in college down in Phoenix, Arizona. And I took this car in a test drive to the apartment that I would spend every day. I would visualize for 15, 30 minutes. I would visualize, owning a house, owning this Mercedes, and, these things that I really wanted, owning a business. And I got to take this on a test drive to the place that and found the exact apartment where I would sit at day after day after day, visualizing my dreams and what I want, which is something that I still do. As it continues to work, I gain, confidence, and it's not something I'm going to quit doing anytime soon. So this was absolutely a dream come true for me. And I'll tell you what, every single day, driving it around really is sort of an affirmation of just the hard work that I put in over the years. This was a long time ago that I've been dreaming about this, and many years I thought, maybe I'd never be able to get to that point, or whatever the case may be. And today, a 2020 Mercedes is worth less than 1 Bitcoin. Pretty goddamn amazing. This car costs less than 1 Bitcoin, and that is awfully special. So that was what I wanted to share in terms of what's been going on in my life. And as that is definitely a brag, it's something that I share because I myself find a lot of motivation from seeing other people, work hard and succeed. And when I can see they're obviously, doing it the right way, putting in the effort and keeping their morals intact and that sort of thing, and achieving some of their dreams and some of their goals, that always motivates me a lot to then go out and work harder myself. So that's really going to be the main motivation for sharing that type of stuff, and sharing the things that the fun things that are going on in my life, because I think that at the end of the day, if we're here in Bitcoin and trying to make some money here and willing to work hard, we got to be having some goals to work towards, and that is going to be really what life's about. It's not the numbers in the net worth piling up on the computer screen. It's more what are you willing to work for, what do you want, what are you willing to work for, and then how long does it take, are you going to give up, that sort of thing. So definitely excited to share that. And now I am just about ready to get into the charts, but I've actually got a couple really great tutorials that I want to share beforehand. And I also want to show the description. Generally, I don't think anybody really checks the description. It's all the same type of stuff, but I've actually got some really good stuff down here. In terms of like, a lot of people ask me for Wyckoff tutorial. Boom, right here. I guess I need to get that linked, but so you come down to the description and you've got this Wyckoff tutorial that I guess I definitely need to get that linked, but here you go. This is where I learned how to use Wyckoff. It's a really, really, really good resource. And a lot of my other favorite resources are going to be, geez Louise, where am I looking for here? Right down here in the description. For example, New Concepts in Technical Systems by Wells Wilder, Parabolic SAR, RSI, that sort of stuff, Japanese candle charting sticks. These are all free materials. My favorite podcasts, well, Hyperwave that I was in, but you have Tone Vays, Josh Olszewicz, Trader Main, Bitcoin Jack. Check these out. Indicators and tutorials, these are all free. These are the two I'm going to go over right now. I've also got the BitMEX tutorial available. Took this down a while ago. It is now available again. Brand new indicator available that I'm going to be excited to share, the FOMO Finder. So we'll take a look at a few of these things. So let's go ahead and click on risk management for investors. This is what I want to point you guys towards. Again, this is something that I would generally charge for. Like, this is like the information that, a lot of it, I just kind of, a lot of the stuff that I would generally keep is all of it is put in here. This would be a stuff if they ask me to give a presentation, at the CFA Society or wherever the case may be. This would be the type of stuff that I would put together. So it's PowerPoint presentation, risk management for investors, really, really important stuff there. And then also have risk management for traders. And this is on the new website, alphanalysis. We see the forum is already getting some activity, getting some comments in here on the investors tool belt. There will be more to come. This is just the first edition of the investors tool belt. So you'll want to make sure to come over to alphanalysis.io/forum and sign up. You sign up for free and comment. You can now thumbs up and that sort of thing. So really cool. So you've got the traders tool belt, investors tool belt, PowerPoint presentations, high level stuff. I really don't think you're not going to find anything else out there like this. It's I really, if there was anything better out there, I wouldn't even gone to the trouble to put that together. FOMO Finder. I can't wait to get into this. Don't want to make this intro too long, but this is something you guys will really like. I'm going to put together a video for some of the finer details. But for now, it's pretty intuitive in terms of, let's see here, we're going to zoom in. We zoom in by dragging this guy here over to where we want that. So we see that we have pink and purple is capitulation / panic. So you get to kind of see where those showed up. Like, for example, right there, you've got some pink and purple, right? And here you actually got that purple signal right in here, some nice ones. So we'll go ahead and zoom in a little bit on that. So yeah, we see we got a little bit down in here, which I was sharing a lot of this stuff in real time, and then one in here. And then the red and the green is where you get to greeted FOMO. And that's where, you may continue, going higher, but it's a spot where I look to deleverage to take profit, to de-risk. If we are in a stage of, red or orange, that's what signals to me greed or FOMO. And for sure, it could just keep mobbing much higher. And I wouldn't short greed or FOMO in a bull market, but I just use it to kind of take profit, to really sit up in my seat and pay attention. And then when the market's moving hard and fast, it helps me to sit back and wait for some sort of signal like that. And it also kind of confirms when you get some dips that occur that don't, where before you get to any greed or FOMO during these bull runs, a lot can be done here. And all of these signals are available for free, alphanalysis.io. So let's just take a look at, if you were to go to alphanalysis.io, you would see right here, FOMO Finder. And if you click on that, you don't need to sign up for anything. It's out there for free. And if you want to comment in the forum, that's where you would want to sign up. And so here you go. You get right there to the FOMO Finder. And I will be getting into some of that stuff. So you have kind of the neutral levels, the capitulation panic levels, and then the greed and FOMO. And right now we have been seeing some greed up in here that is now starting to reset. Now that we see this candle turning back to yellow, looks like maybe those last three candles, those are greed and FOMO right there. And now it's shown some signs of turning back, and that's really what I look for. Like here, when you see some greed and FOMO and just a little correction, when it turns back, that can be very important. So that is something I will be putting together a video on here very shortly, and I want to make sure that you guys know it's there, but I will be sharing more about it. It's based on the funding rate, the premium in the futures index, and the price of spot relative to the price of leveraged contracts. Idea being that when the market gets over leveraged long, you see it from overpriced futures and leverage contracts. You see it from over people paying too much in funding for longs, and you see it and too much of a premium from the futures. So combine all of those together to give some sort of metric for when it's, at a tough spot. So that is what I wanted to share about that. Make sure to come down and check out, you got the public forum, the FOMO Finder, of course, Hyperwave and whatnot. You got some affiliate links and then the indicators and tutorials. All right. I'm going to take a quick look at the chat, and then we'll be getting into the charts. A proud American in a German car. Excellent. I love it. Yes. And I think that that's a really good comment, actually. And it's important is that you want to, have pride in your culture, in terms of you want to know where you come from and know what you do well as a society and as a people. And then you want to recognize, what do other people do better than us, and where should we trade? My whole life, my dad just shit on foreign cars. Like, no matter how much better they were proven to be after a while, he would just make up things like, oh, they're going to be the part, if you have to fly in a part from Japan to service your Toyota, do you really think that that's going to end up being worth it in the long run? It was a situation where he would only buy American made cars. But I really think that it's important to, have pride is such a weird word in today's society, but I think you have to, you have to know where you come from, and you have to recognize what makes you who you are, and really, have pride in that, no matter what the case may be. Something I value more than anything else in the world is culture, and going to different places with different culture, tremendously valuable. And then when you go to a place like Japan, where just their steaks are better, their cars are better. I mean, like, damn near everything Japan does is like at the top level. You kind of have to step back and be like, wow, maybe I should kind of learn from these guys' process or something like that. Oh, geez, now I lost my I don't know. Lost my Zoom. Back to meeting. Come on. Oh, there it is. Okay, good. Sometimes zooming a bit lost in this disaster. Okay. And hopefully everybody's in for kind of a fun show tonight. It's my main plan is to be streaming a regular time. I'm shooting for like an hour before the traditional market close, which would be about 1 o'clock Mountain Standard Time every day. Today I was running late, and as I'm getting started, it'll be, you know, a little period of getting back into the groove of things. And tonight I just wanted to make sure that I did it, and so that I'm back out and made that commitment. And you know, it's going to be maybe a little bit of a more of a nostalgic show than normal, and hopefully I'll resurrect that. Why is Bitcoin crashing? Bad question, because it's not. Self-worth, not pride. Okay, yeah, I like that. I like that. But also, it's like worth in the, you know, because I have self-worth, but it comes from the pride that I have and who my father was, and my who his father was. Like, I come from a line of farmers and like hardworking people, you know, who are like salt of the earth type of people. And the culture that they have is that you talk little, you listen much, you know, you're the last to speak, you're the first to listen, and you are also not afraid to go out for a drink and you know, have a good time, and you talk shit to your buddies, you give them you know, nicknames. Like, these are things that I got from the culture that I was raised in. And for sure I have self-worth, but when I really started questioning, you know, my own tribe, is when things got really kind of scary for me. And that's where I really had to find, you know, what I did, you know, have pride in from where I came. So it's I think, you know, especially being a white person in America, that I need to find a different word. But I think it's very important, especially for, you know, people like my, you know, people, you know, who are told that you know, shouldn't have any sort of, you know, dignity or pride in the culture that you were raised in. I think it's, no matter who you are, where you come from, what your color your skin is, what your gender is, whatever the case may be, I think it's very important to find the things that make your culture good. Like, what are the things about your culture that are good? There are always good things about the culture that you are raised in, and that is something that is very important for me to really take that to heart. Okay. Plenty of that. Nice call on Litecoin. I appreciate that. And a good segue into, I guess, another brag before we get into the charts. I did want to share the first stream that I've ever done myself on YouTube. The first stream on this channel was Sawcruhteez Streams, August 19th, 2019. As I talked about at the top of the show, getting into the live streaming, and just thought I'd pull this up because we are, you know, looking pretty darn good for the action that I was looking at in terms of $150,000 Bitcoin by December 2021. We know, or at least on a show we've talked a lot about Decembers after halvings being major time, you know, targets to time targets for tops, and December's before halvings being you know, major time targets for bottoms, that sort of stuff, looking historically. So December 2021, I think, is going to be a very important date, and the 151,000 is, you know, seeming pretty darn reasonable as it stands. So we'll have to keep an eye on that. And shout out to the first video on this channel. All right, let me get my notes out and we'll get into it. Oh yeah, one thing I wanted to say, if you have questions, I'll be doing my best in the live chat to answer. But if you're not watching live, or if I don't answer, come over to the emasar forum, go to daily live streams, and just ask a question here. And if I'm not able to answer it in the live stream, this will be the first place I check. But if I'm not able to answer it in the live stream, then I'll get to it in a reply afterwards. So alphanalysis.io/forum, and then look for daily live streams. I'll go ahead and post that in here. All righty. And again, highly recommend the risk management tutorials. So I know it's something like everybody just talks about risk management being the most important thing, but there isn't much advice out there outside of just don't risk more than 2%. And flat out, I think that that is really, really bad advice. I think that risking 2% is really never going to be a good option, flat out. And I outline why. Almost everybody should be risking less than 2%, and maybe some people should be risking significantly more than that. And then I go deep into managing risk for investors in terms of risk using a credit card for instead of a checking account, and not in the alternatives to using a savings account, like really looking at the risk of investing all the way around to having an emergency fund, to making more than you spend, to paying a financial analyst or a financial advisor 1% of your fund every year to do nothing more than tell you to buy and hold stocks, and challenging you to see if that if diversifying in a range of stocks and bonds is really diversifying at all. So get into a lot of really good stuff in that, and stuff that's hasn't been out there really before. So I will continue to shill risk management for investors and traders right there in the description. All right. So we are ready to get into the charts, and moving forward, I'm hoping to be able to cover Bitcoin, Ethereum, and Litecoin on a daily basis, but we're gonna have to wait and see if I have the time. Today I'm just gonna cover Bitcoin, and if I am only able to get to that on a regular basis, then I'll probably just stick to that. So let's see here. I need to pull up one more thing. I know everybody wants to see some charts, so appreciate the patience. Okay. All right. Okie dokie. So here is what we're going to be doing. Basically, I'm really planning on this show to be pretty darn boring. At least my hope is the show is going to be going through my daily process and just what is this, just looking at these, this is the process. And I'm going to put together a video outlining the process and really getting to details. There's going to be plenty of videos to come, but want to start with really focusing on the risk management for now. And there will be, you guys will be able to follow along pretty much everything, I think, today pretty easily, but there will be plenty more in depth for those who are wanting to go that route. So here is the daily process, just the levels that I go through, and at the end where I'm looking to, current exposure, what's the estimated risk, what's my target risk. Risk is going to be based on this risk slider, which is something that I think is pretty unique, and it's I think gonna it's still evolving, so it'll be fun to be able to show this on the show and see how it evolves through time. So, and then look at conclude with where am I entering, where are the stops, and where are the trends. So with that being said, I think I'm gonna have to pour myself another drink and we'll get into it. So this is pretty much how I start right here, is I just get these two on the same screen, and make sure I got my indicators loaded up, and then we get into it. Oh. Beautiful. Okay, so this will be exciting. As with the release of this show, I'm going to be releasing some indicators, specifically this one, that will be available for free to everyone. I'll tell you all how it works. And I am extremely excited about it, so much so that I've decided to put my own name on it. And I will have, I think, an indicator developed and published tomorrow that will be available for free on TradingView. And then along with that, I expect a video to be available tomorrow for the CMA, aka Coates Moving Averages. And I'll go ahead and get into basically how those are calculated right here, because this is something that has really been making a difference in my trading, and it's something I'm really, really excited about. It is definitely complementing emasar, but maybe accomplishing some things a little bit better than emasar ever was able to, and it's a lot simpler. So that is going to be what I am very excited about and looking for. Let's see here. So we're just going to go to start out to build this thing. We need 2 exponential moving averages. And we're going to do the same period, 2 period. And then we're going to change the source. 1 is going to be low. So we've got 2 low, exponential moving average. Click settings, go to inputs, click for length, you do 2. And for source, you do low. Okay. And for second one, you do 2. For source, you do high. And for the last one, you search least square moving average, least squares moving average. Set that to 9. And do high-low 2. So that'd be high-low divided by 2. If you're interested in the calculation for least square mean, I would recommend looking into it. Least square mean. The important thing to know is that it weights the extreme exact highs and lows more heavily. So the extreme wicks, the most extreme prices are going to be weighted most heavily for a least square mean moving average. And this is going to be right here, the CMA. Let's get that a little bigger. And this is what I'm going to be looking at first and foremost on a daily basis for where to set my orders. This thing is simple, but very powerful. And I will be getting into, let's, we need to make this different color. Exactly how I use it and all that sort of stuff. So here it is. We've got the 2 high, we've got the 2 low, and we've got the 9 least square mean. And that is going to be the CMA. And what I look to for the first place that I look to set orders. So this is going to be the daily that we're looking at. And we are approaching the sell zone. Make sure that as we're approaching it very quickly, I will go through this. I'll try to go through it a couple times a day. And sometimes as we're going through it, I got to make sure my order is set properly before even really doing much. So this area between this 9 least square mean, this blue, and this yellow, that's going to be my trim zone. So it's going to be right at the current price. And definitely a little bit of an adjustment that can be made, so that's good. This is why we do it. Okie dokie. So I am actually going to be trimming right now 48638 up to 48787, just filled on the first one. 8787. Nope. I'm superstitious, so I go for lucky numbers. 48787 turned into 48777 because that 3 sevens, that's lucky. Okay. All right, so I'm set. And now I come into here and I would say resistance. I would hover over this and then look at what the numbers are so that I get it exactly. We've got 48596 to 48823. 623. There. 48926, yeah. 48596, 48596. 2, 4, 8823. Okie dokie. Sometimes when the market's moving, and especially when you're streaming, you can get a little too quick. But there we go. There is our resistance. And of course, when the market's moving and I'm trading and trying to stream, I'll be making some mistakes. But that's resistance. That would be the sell zone. 48596 to 48823. Okay. And then support is going to be 46645. 48645, and that is where I'm going to, gosh dang it, 46645, 46645. Okie dokie. That's where I'm going to make sure that I have an order there to re-enter what was just sold. 46707. That sounds lucky enough. Yep. 46. And something that's really important, you know, when markets are moving and you're starting to enter orders and, you know, you're starting to mistype some things, it's really important to double check. Always make sure that, you know, just, you know, quick double check before clicking submit the order that, okay, 46707, quantity check and check. Okay. All right. So now I'm set there, and stop for that is going to be based on 1 hour emasar. So we are going to go ahead and pull up emasar. And I guess how the show maybe will go is me kind of moving pretty quickly and it not making a whole lot of sense. But if you watch day in and day out, maybe it'll start to make more sense. And as I'm moving quickly, it'll start to, you know, your brain will be moving as quickly. So quick note, backtester is very close to being ready. We are working our tails off to test that and make sure that it's ready to go as soon as possible. It's actually just up on the chart there. So we'll expect to have that here in the next week, but you just don't know. Okie dokie. So we're gonna turn that to in trader mode. And see, that was a nice little dip there. So I'm going to be wanting to set the stop about halfway between this buoy and the bottom of the ocean. Other option I have is halfway between the underworld. Here I'm definitely good with this. So it's going to be 4,600. So I just trimmed, and if it comes down to 46707, I'm going to be fully re-entering that. And if it then falls to 45, I'll be stopping out on that reentry. So I'm gonna put that in right now. Still got one order unfilled, so I'll have to adjust that if I get filled. So sell, stop loss, quantity, price, 40, 555, 555. That's a fish song, so definitely a lucky number there. So 40, 555, stop loss, confirm. All right, set. Now, if I get, if the price gets to here, let's see, 48,777, then I will get another fill and I will double the stop and double the order to rebuy. So stop is 45.55. Okie dokie. Beach 46.1. That's where I'll be wanting to have some orders set. Oh, I keep thinking that's the space. That's what it is. Okie. That's where I'd be looking to buy some based on emasar. And we see that the daily CMA is giving a very similar area. So probably what will happen is if I get that fill at 48,777, what I'll do is instead of doubling the order here, I'll have one order here and one order here. Because I just like, it's the more I can spread out the orders, the more likely it is that I don't just completely miss, you know, all of them. So if I've got orders in similar spots like this, I like that. And so that's what I would do is I would keep the stop the same. And if this trim gets filled here at that yellow too high, it's just an EMA. Oh, I screwed it up. It should be just a regular MA. Okay, it's not gonna be a big difference, but I gotta make sure here. The exponential moving average, it's gonna weight the most recent price action more heavily than the past. Like it really looks to kind of not account for the previous price action nearly as much as it does the most recent. And when you're using a moving average as small as a 2, you really don't need that. So I definitely just use the simple MA for the 2 high and the 2 low. And it shouldn't be much of a difference at all, but we're still going to stick to exactly what it's supposed to be. And if it wasn't gonna have, you know, a few mistakes, then it's not gonna be a real start to a stream, is it? So 2 high, simple moving average, 2 length, source high, simple moving average, length 2, source low. Okay, and then we're gonna change that color. Okie dokie. So we see pretty much the same thing. Let's see here, 48,850, 48,850. So about a $20 difference. No big deal. Still looking to trim. Let's see here, where am I at? 48,777. So I am still inside that slightly. So still looking good. So just change the exponential to the simple because you really don't need that exponential calculation when you're only using a 2-period MA. So this is going to be right here. The sell zone is the 9 LSM to the 2 high, simple moving average, LSM being least square mean, and then the 2 low is where the orders are going to be set to re-enter. The 2 low and the 1 hour beach. Okie dokie. And we've got the stop in place. So sky would be an area I'd want to trim right here. 49,912. And then that's where I would kind of compare it to this. And we see, again, you know, very similar stuff. So if I saw that this guy was inside of this, inside of my order, I'd probably adjust it down just because, you know, say my order is at 48,777 and say the sky's at like 48.5, then I'd adjust it to, you know, 48.5. But here I don't really need to be adjusting it up. I already got the first fill, so I'm looking good. Buoy. Critical level for trend continuation, 41,877. That's why I put my stop under there. Underworld, where trends go to die, 39,321. All right, now move down to emasar 4 hour. Just keeping it, you know, pretty boring. Just looking at, you know, what levels do I need to know where they're at, and are my orders set there? 39,500, we'll say. Sky is 51,350, we'll say. And it's angled up. That's very important to me. When the sky is angled down, I really expect it to act as resistance. And if it's going to eventually break, I, you know, look for consolidation above the 50 and below the sky, and for the sky to turn up. Something we've been covering over the last few weeks on the Honest Analysts. And now, as I'm seeing the sky here, I'm not really seeing that as too much resistance, being that it's angled up. That's very important, and that we're supporting above the 50. Very good spot to be. So I'm going to say the sky is 51,350, but it's turned up. Buoy 35. Underworld 32,962. Weekly Coates moving average. Big deal here, close above. That's what I look for in terms of that makes this a really good buy. And it looks like it got front ran, which is really strong, really strong. So we see that trends kind of start out with when you consolidate, what I would expect to see is support at the too low and resistance at the too high. And then when you close above the too high, that's where I really start to look for a trend to follow. And that's where, so this area would be the buy zone between the too low and the 9 LSM, which is very much where I was looking to buy here, but it looks like it might have got front ran. Be interesting. There's definitely, you know, just times where the price doesn't get down to where you're where it would need to get for your signal to occur. Let's try to find another good example here, where you break out here. You really, this opened right here, but never really dipped down into this like at all. So you would have, you know, I would have really missed out on that action there. So sometimes that the big moves follow when there's a lot of people missing out and kind of either trapped in shorts or out of longs. So that's, you know, to be expected. And I think part of my edge is going to be just being okay with missing out on fills. Like a lot of the time, less than 50% of my orders get filled, probably closer to only 20% get filled. And I'm just totally cool with that. It's like playing poker. I fold 80% of my hands pre-flop because 80% of hands pre-flop are, you know, not gonna be any good. And in poker, it's more like I'm casting a net where I think aces are swimming, and it's going to be really hard to catch these aces. But as long as my net's waiting for them, you know, I just have to be very patient and ready to just, you know, not catch anything. So we'll see what happens. Basically, when we close above here, I would be looking to buy here and trim here. So now that it has already nearly entered the buy zone and it is nearing the trim zone, I'll be paying very close attention to see if we close above this week's high or not. And if it does, then I think that this is gone. If it doesn't, then I think I'll still have some options, because if, say, it closes here, this will continue to move up, so I'll be able to progress my orders. And I don't really care about getting in at the I don't care if I buy at 42 or 44 or 48. I care if it goes up after I buy. Like, that's all that matters. So if I get and sticking to the system. So if we close in here, this will progress and I'll get to adjust my orders, and maybe I buy at a worse price or something like that. But as long as I'm sticking to the system and getting into a good spot, then the only thing that really matters is if the market goes in my favor afterwards. Okay. Support is 41,779 for 437. No, I'm still getting used to this number pad here. 41,779, 44,375. Okay, resistance 49,359. Stop. Okay, we've got a couple options. We can use either the 4-hour emasar or 2 weeks ago. So if this is the current candle, look 1, 2 bars below, before current candle 1, 2, and in that low. So we have 32296. Or be like 33 between the buoy and the underworld, 33.5. So I have two options for the stop loss on those orders. Okie dokie. So now down to the risk slider. This is where I will be releasing this indicator here very shortly. It's part of the, it'll be when the backtester is released for emasar. We will get these oscillators included as well, which I'm really excited about. Have been working really, really well, and that will be included to everybody who has emasar. As soon as the backtester is published, this will be part of that. So I will be getting into that here within the next few days as soon as I can. And for now, we're just going to be looking at these levels. It's pretty simple stuff here. So this thing here is an oscillator where you'd look for buying when it crosses in here and selling when it crosses up here. And it's going to be based on a Fisher transform formula applied to the distance to the moving average. And we found that to be really effective. And what I've been using it for is to kind of help me to determine risk in terms of up in here. This is where I look to really scale out of risk, especially if we're entering if we're getting some FOMO signals from the FOMO finder, and the oscillators up here giving me a sell signal. Well, it tells me I need to be taking on minimum risk. And if we are down in here, this is where I want to be looking to take on maximum risk. So here we have my min risk and max risk. This is based on the Kelly criterion, which I get into in the risk management for tutorial for traders in the link in the description below. Okay. So we have a sell signal above 2, currently falling to 1. So how I look at it is anything between -2 to 2. This is neutral, like basically kind of moderate risk. Once we get up here, this is where it becomes like overheated. Like I want to go minimum risk. So now we're really kind of back down into the moderate zone. And what I'm paying very close attention to is that as this has started to pull back, price has continued to kind of squeak upwards, which is much different from this one here. And that's very, very bullish. If we get an oscillator to reset while price goes sideways or even keeps kind of creeping in the direction of the trend, super bullish. So that we'll just say equals moderate. And now we go down to the 4-hour. We got some nice signals here recently. As this price hasn't really done much or gone too far, we've gotten some really nice signals out of this guy to where we see, what I love about this is that when you get these nice big moves, this doesn't get over hot too quickly. Like you'll see a lot of oscillators do, like they'll get kind of overbought in here. What's really, really cool about this thing is when it gets in a trending market, it'll kind of recognize it and not get overbought too quickly. But then when it gets into a ranging market, here we've still got some good signals where you, down here, you got the buy cross, and then here, you got that cross right at horizontal resistance, and then you come here for that one to that one. So in trending and ranging markets, seeing some really, really cool signals. This one down here is something else I'm really excited about to share, and it's basically like an RSI calculation applied to emasar, calling it the ESI emasar strength index, and using it very much like Fibbo does. This was developed after learning how Fibbo uses the RSI and the horizontal zones to identify bull versus bear versus chop. And this would be our chop zone right here, plus 0.3 to negative 0.3, bear zones down in here, and then bull zones up in here. So we were in the chop zone back in here, and now we've gotten out of the chop zone and we're throwing back. So this is where I really like these signals here, where we have the ESI, the emasar strength index, throwing back to retest prior resistance for support. And the cool thing about this is the horizontals are drawn preemptively, and they just are critical. Like time after time, you'll see like all these horizontals are drawn on the chart. You don't have to necessarily adjust them based on what you're seeing. You'll just see that resistance turning into support, resistance here while you're chopping, and then turn into support once you break out, and then kind of back into the chop zone here. So it's been really, really powerful. These levels have been very, very important time after time after time. So here we had price fall into the chop zone and resistant, and now it's broken out of it and throwing back. So when we get these crossovers around -2 with this testing the bull zone for support, that's where I will be looking to, amp up, scale up the risk. Okie dokie. So this is a buy signal, but it's not down here in the oversold territory, so it's still moderate. And probably none of this stuff is going to make any sense. So I hope I'm not confusing people too much. If I am, don't worry, try to just stick along until we get to the end to where I can just, come to the conclusion. And then if you are, if any of this stuff is, intriguing at all or anything, I'll be going through it day after day after day, and, kind of like treating it just like a class. That if you're, my commitment is for 3 months, the daily streams, 6 days a week. My plan is Saturdays to take off, and then stream Sundays through Fridays, and to do it at a consistent time. But the commitment I'm going to be making is 6 days per week for 3 months, and sometimes it'll just have to fit in where it can. But anybody that is going to be willing to put in the effort over the next 3 months to learn these things, all you'll have to do is just kind of, study and keep up and rewatch and play it in slow-mo or fast-mo or whatever the case may be. Okie dokie, FOMO finder. So what I'm going to do here is just go straight to Bitmax, as I saw some things changing. I saw that candle turning yellow. Let's go ahead and take a look at alphanalysis.io. Come on, where's my fill? Where are we at? 48,650. I want 48,777. Give it to me. All right. So here, FOMO Finder is showing the last couple candles were greed to FOMO, and now we're seeing a yellow candle. So I'm going to want to go check out, see what I'm seeing here. I realize I'm not allowed to log on, but what I'm just going to do is come check. So we see in 44 minutes, 0.05. And then it looked like it was spiking even higher there in a second. Oh yeah, 0.1126. So average fee is going to be 0.01%. Is going to be balanced. Anything over 0.03% is going to start getting unbalanced. So that's definitely starting to get unbalanced towards people being overconfident and long, specifically leveraged speculators. And then once it gets over 0.1%, that's where we start to expect some greed and FOMO stuff to occur, specifically if it's confirmed with the premium in the futures. So let's take a look at 52,797 minus 48733 divided by 48733. 8%. Oh my gosh, that's the biggest I've seen. That's not good. 8.33% premium futures. That's significant. That's a big deal. 6 to 8% is the level that I look at for significant, very, very like FOMO, like just full on FOMO. 8% premium futures is a really big deal. Let's see if we can come back here. I want to take a look. At what we saw back in there. So yeah, this is kind of the action that I'm looking for that would be kind of problematic. So this is just that action from back in June of 2019 where you get the FOMO and then you reset, but then as you approach resistance to kind of break out, you re-enter that FOMO stage. Like just too many people think a breakout's going to happen. So kind of looking at that FOMO reset, but then by the time it comes up, it's just too many confident dip buyers. So let's see. That's definitely a problem for me, and that's where I'm going to be wanting to make sure that I am effectively managing risk. And this is where I'd maybe look to even increase the amount that I'm selling and look to not buy back fully in this sort of environment, where I'm not going to be betting against this trend by shorting and not even thinking about it. What I'm thinking about is how much do I want to be taking profit here? How much do I want to re-enter? So EXA is telling us moderate risk, but FOMO Finder is telling us min. So min to moderate, or 2% to 4%. Okay, and this is where I'm actually in a really good spot. Anybody that's been following me on the Honest Analyst for a while now, I've been sharing, exactly what I've been doing there, and even a spot where I sold at what was not a good price. I'm just still really happy about it. So I sold back in here, and what I did was, I was long from the emasar signal down in here and just doing my best to hold on as I'm watching the unrealized profit pile up, and was really worried about what I was seeing here. So I took a full exit, which meant that I sold, I exited the amount that I bought in for. So let's just use easy numbers and say that I bought in for I bought in for $10. I sold enough of the exposure to get me back that $10 that I bought in for, and the remainder I just left in Bitcoin. So I ended up having about 30% of my exposure left on the table for zero risk, because I recouped my entire initial investment and then I left the profit in Bitcoin. And that allowed me to maintain a significant amount of exposure with no risk. And for me, that's like the most critical part of to really trade a market well. I need a base amount of exposure such that when the market is doing this and I'm feeling like I'm just not even feeling left behind at all, if I miss out, like say my orders here miss, if I have no long exposure, then I'm really stressed out and anxious and making bad decisions time after time. Whereas as soon as I can get myself a base exposure with risk-free base exposure, like the easiest way to put it would be like, say you just bought at 10 and then it goes to 20. If you sell half of your exposure, then you get your initial investment back and you still have 50% of the investment on the table at no risk. And if you are able to maintain a good base exposure, long exposure, whether it be through a hodl or a trading account or whatever the case may be, now when some of the orders like that's, I basically need that to be able to effectively be patient, because it is very, very, very hard to be patient when the market is moving very fast. And the only way I could do that is by maintaining a base level of exposure in the direction of the trend. So now I've got that and I'm in a good spot. So when I go through my like Ethereum and Litecoin positions will be very different to where I'll actually be looking at buying recently and what's the risk there and whatnot. Whereas here it's going to be the exposure and the risk are going to be kind of not easy to impossible to replicate unless you've done something like I already did. So hopefully that won't be too confusing, but I just have to, I'm here to share what I got and what I'm doing. So that's what we got here. I got logged out, so let's get back into the exchange. Okey-dokey. Okay, so now I have 43% of the account. Long. And so back here, when I was selling down in here, I had about 30% of the account was long, risk-free. But what happens when the price moves in favor? Here we moved in favor 50%. So what happens is that 30% becomes, 45%. In this case, 43%. 43% long. And still no risk because I didn't buy back in to make that 30%, 45%. Simply the price went up. Edged. Target risk. 2% to 4%. So this is what I can risk on a re-entry. When I'm looking to buy in here, or like here, and then setting my stop, I know that I can say enter. So let's just say that I'm looking to enter here at 39.6, and I'm looking to set my stop. Where did I say 35? Like here, that'd be 13%. So if I'm going to risk 13% on buying here, and my target risk is 2% to 4% of the account, then what I would do is do 2 divided by 0.1367. Okay, so if 2%, if I want to do 2%, if that's going to be my target, I do 2 divided by 0.1367 for 13.67%. The result is 14.63. So what that tells me is that I can enter 14.63% of the account here with a stop here. And if I get stopped out, I lose an estimated 2% based on how much slippage occurs. And so therefore I can look to enter about 14% of my account here at 39.5, and then another 14% here. It'd actually be less than that after I go through the calculations. I'll make sure that that is correct. Ooh, I might be getting another fill. Did I? Heck yeah, filled. That's awesome. Okie dokie, so here we are. Testing the top of resistance. So this is absolutely where now I am filled on those trims, and looking to re-enter here at 46.317 with a stop at 45.55. So that'd be another 12%. So yeah, it would be the same. So I could enter about 14% of the account at 46.650 and 14% at 39.500. I am going to shy away from that based on what I'm seeing with the premium in the funding and in the futures. So if I had no exposure to the market, I would just have to take that 2% risk. I would just have to. But being that I have 40% of my account already long, like that's huge exposure for me to have 40% of my account in any position. That's big exposure. So therefore, I'm just not in any rush to re-enter to risk, 2% of the account to 4%. So therefore, I'm gonna really cut that in half. So the max that I could do is 2% on each entry, which would be 14% of the account. And then if I look at the lower end, it would be 1% risk for each entry, which would be divided by 2. So we'd be looking at 7% of the account entered, set for orders here, and here, with stops set here. So let's go here, entry 7.5% of account at 45.55, 555 fish song. Go check that out. I'm probably gonna be jamming some fish after this. Anybody sees that corner of that poster up there? That's a fish poster. Trey Anastasio. Bow down to him every time. Okie dokie. 39,500. Stop. So here I just kind of make it a little bit easier for myself to follow. So we'll have entry A, entry B. Stop for A is, oh, I screwed that up. That's why we always got to double check. That's the stop. 46,645. And I'm not going to be trying to front run it all. It's 46,287. Go to 88. So 46. Just in order now. 288. clicked on the wrong keyboard there, so you can see I was actually, I wasn't trying to tell you one thing and then type in another. 46288. Okay. And do I have my stop? 4555. Yes. B. Stop for B. Stop for B. 35. Okie dokie. Fully filled on trims for today. Geez Louise, I just can't. I'll tell you what. This will get a lot smoother as this is something I'm used to doing, myself without anybody watching. As soon as you start working with somebody, looking over your shoulder or whatever, that's as soon as you can't even type fucking fully filled. But it will get a lot smoother, and it'll start making a lot more sense as time goes on. But this is it. I mean, if you ask me, this is what trading comes down to. Finding the indicators that you believe in, and then maybe tweaking them if you find any ways that they can do better. Finding the exact time frames that you trade, because if I trade emasar and I buy the beach, well, I don't buy the 2-hour beach. I don't buy the 15-minute beach because I don't trade those time frames. So you have to have your indicators, you have to have your time frames, and you have to trust in your stops. The stop is the most important part. The stop is the crux of trading. If you can't trust your stop, you can't effectively trade. And if you can't execute your stop, once you have a stop that you trust, do you have to use a stop market? Is your position size going to be too big to use a stop market? You have to have a stop that you trust in, and also one that you can believe, that you can execute. And then once you have all that, I really think that this is a kind of a unique idea that I've come to that will continue to evolve, that I think could be, a good way to think about some of these oscillators where when you get overbought, like use the stochastic, for example, a lot of times the biggest moves will happen when the stochastic and the RSI get overbought. So here's how I think of it is when that sort of situation happens, I want to de-risk and de-leverage. Because the biggest moves down will happen in the blink of an eye, such that if you're not ready for it, you're just left behind, and you're just not going to be able to believe these prices. Like, am I really going to sell now at 25,000 or whatever the case may be? When the market really decides to turn around, if you don't have exact areas where your position is wrong, or that you're trailing the stop, and that sort of thing, it's going to move so fast that you're not going to be able to react in time. And then once you finally are, it's probably going to be the worst time to do it. So let's see here. You've got to have a way to effectively, take some profit, and that is going to, if you're always selling on the way down, like think about how often do you sell? Do you always sell after the prices move down, or do you scale out as the price moves up? For me, this is what works best, to just scale out as the price moves up, and never exit fully in a bull market, to maintain some exposure. But when the price is moving up, I want to scale out. And then when it's moving up and it's getting, really overheated, I want to scale out more. And here's the thing. If the biggest moves then follow, I've still got exposure and I don't need much. Think about a hyperwave. When you enter phase 4 and it just goes bonkers, like we saw in November, December of 2017, when it's moving 5 times faster than it ever has before, you only need 20% of the exposure to make as much as you're used to making. So therefore, I think that when markets really make these parabolic bursts, these huge moves, they do so after they're able to support a huge amount of selling pressure. And then all of a sudden it'll just slip through and boom, and it'll go. And so that's a spot where I want to make sure that I maintain some exposure in the event that it does just pop and go. And then it'll go so hard and so fast that just having a little bit will end up meaning a lot. Whereas if it goes the other way, it'll go so hard and so fast that you'll remember how much your account was worth, at these prices. And now you're looking at it, you'll just get so screwed up in your mind and in your emotions that you'll almost necessarily make bad decisions. So I'm always like, this is actually a good example just in terms of, I think a lot of people would kind of feel uncomfortable, maybe a little bit being in my shoes here, to where I sold at this yellow line and the blue line, is that right? Yep. So I sold 48,781, and then like, let's just go ahead and take a look, because I am in the exchange. So we got 48,638 and 48,777 fills, and now the price is higher. And a lot of people, like, how would that make you feel? For me, it makes me feel like, heck yeah, I just got filled. You know, the worst thing for me is the price getting like right here. Here's the worst thing, and this is actually probably why, a big reason why I end up getting a bad price. When the moves down happen, they'll start by not getting to your fills. So say, for example, you know, my order's here and then it doesn't quite get there and then it just totally dumps. That's what really hurts me. Like when I'm within an inch of getting that fill and then I miss it and then it just totally dumps. And now I'm left with, oh, if I just would have gotten this little fill here, I wouldn't have any need to sell down in here. But because I just missed that little bit, and here again, look at, I can't zoom in anymore. Maybe I can if I do that. But if you guys can see this candle here again, right below that line. So that's how the moves down will happen, where they just missed these fills. And now I'm left in this spot where it's like, oh my gosh, what do? I need to, you know, I didn't get filled here. I don't get filled here. This would be where I'd really be wanting to get filled. And now I got to figure out what the hell I'm going to do. And that's part of trading. So that's where right here, I am not, I'm just loving life, because what do I want more than anything else is this. I want to sell right here, and then see this happen. And that's something that's very, very important, is you need to visualize, what does a good trade look like for you? What does a good trade look like for you? Literally take 10, 15 minutes every day and visualize, what does a good trade look like for you? Okay. I'll show you like a good trade, what it looks like for me. The ideal trade rush, I'm not saying I did here, absolutely not, because I got kind of turned around a little bit, but what is a really, really great trade for me is when I buy around here and then I sell this hard, even, you know, 20% to 80% of the account, depending on the risk slider. If I'm looking, you know, min to max risk, if it's min, I'm going to scale out 80% to take the min risk. If it's max risk, I'll scale out 20%. So here, what a perfect trade for me looks like is buying around here. And I was talking about this candle on the Honest Analyst live stream about how this is a really ideal territory for me. It's a spot I've actually deemed the trap house, where you fall below this week's low, but you maintain above this week's low. That's just perfect action. And look back, I mean, time and time again, you'll see this. You fall below last week's, but you hold this week's. And today, if you scroll back on watching the show and like where I'm looking at stop losses, what did I say? Look back 1, 2, boom, right there. So if, you know, here you are, you look back 1, 2, and you got your stop right there, you looked really good. Me, I got a little turned around right here again, perfect. And then here you take out 2 weeks lows and, you know, you kind of get a move down. So that is, I just think a good example to ask yourself, you know, what does a good trade look like? For me, it's buying here and selling this thing hard, but maybe only 20, 30%. If I can, I want to see a sell right here and the price move through it. I want the price to prove to me that it can move through it. Because when it gets here and it doesn't move through, it turns around so fast that it looks like this, that you had just that little area to sell, that if you didn't sell it, you missed it. And it could, you know, keep going. So that is where I'm going to be selling. I want to be selling every time in case this happens. And I want to be really expecting the other thing to happen, or just, you know, positioned for this. So I'm loving what we're seeing here. I sold here, trimmed, and I want us to do this. That's the number one thing I want. But, you know, the FOMO finder and the EXA, I'm calling this the EXA, EMA exhaustion indicator, developed from distance from the exponential moving average, EXA. That's what I'm calling it. So this right here, combined with this right here and this right here has me wanting to make sure that I take on the minimum amount of risk. And if we're able to move through this type of action with an 8% premium in the futures and a spiking funding rate as price is, you know, testing all-time high territory resistance, if we can move through that, I would expect a big pop in a short amount of time. But in the meantime, I don't want to bet on that. You know. All right, I am out of breath. Has this only been, okay, this is only, yeah, it's been much longer than an hour. Is anybody still watching? Let's see here. Ah, still 130 people watching. All right. Well, excellent. Appreciate everybody for tuning in. I'm going to check the forums for some questions real quick just to see what if we have any. Nope, none there. I can scroll through the live stream, but just doubled my leverage. Nice. Good luck, buddy. Fan from Singapore, Matt C. Shout out. Been to Singapore and love that. Cleanest city in the world, that's for darn sure. Great people. All right, just scrolling through. Who is selling? I will block them. Well, I just sold. You know, who's selling are people probably taking profit. It's very hard to be selling right now and not in profit. So that's what I kind of think is who's selling here is that people who are taking profit. And if you're selling here, then you have probably been taking profit all the way up. And what I just really realized in these markets is that very few people end up making any money in the long term. And the ones that are consistently selling when they're in profit are the ones that are consistently pulling money out of the market and, you know, maybe even buying some cool stuff like that Mercedes, but maybe the ones who are blocking the sellers are the ones who are right. Who knows? I'm just giving me a hard time. I lost my glasses. I need to find those things. So it makes me feel maybe a little self-conscious. I don't know. All right. I think that is going to do it. Thank you all for tuning in to the inaugural episode of the Alpha Analysis live stream. Would encourage everybody to head on over to check out the risk management for investors and the risk management for traders. If you're only attracted to the risk management for traders, you're doing it wrong. The first step to managing risk for traders is investing. You do not try to trade before you start investing. And if you think you can't afford to invest, you cannot afford to trade. And if you think you can't afford to invest, you're wrong. You can definitely afford to invest. And I show you how to join the club. There are two types of people in this world, the savers and the creditors. So join the club of the savers and listen to Albert Einstein when he says that those who do not understand compound interest pay it. So I get into all that sort of good stuff. Risk management for investors, risk management for traders. Check out BitMEX tutorial. Even if you're not a BitMEX guy, this is where I really break into. These videos are definitely over a year old now, maybe closer to 2. But I get into, in this last one, BitMEX tutorial 105, what I look for in the premium in the futures, how traders use that to hedge, and why that is so important when a trader can come in and get a free 8%. Just a free 8% is sitting on the table. Like when you see that an 8% premium is in the futures, maybe that doesn't mean anything to you unless you realize that that's just a free 8% money, you know, for people who know how to trade that position. And once that premium gets too out of whack, too many people are going to come in to take advantage of it, and that's going to, you know, lead to some predictable price action, maybe. So check that out. Even if you are not on BitMEX, this is going to get into, cross and isolated margin. A lot of people think cross margins is like similar to no margin when it is not. It's like 100x margin off the bat, cross margin. So you need to understand what you're trading in, and if you're going to be using leverage, you have to understand all of the details. And if you don't, you're going to have a really bad time. And all that is for free, as well as some other resources here in the description. For example, where did I learn the Ichimoku cloud? Right here. I don't use it much anymore since developing emasar, but it's a very, very powerful tool that is for free. That is a trend following tool that Josh here teaches you for free. So shout out to him. And shout out to everybody for watching. Would appreciate, let's see here, anybody who takes the time to click the thumbs up. And if you haven't already subscribed, I would encourage you to do so. I think that I'll have a lot of good information to share here. And once you subscribe, be sure to click the bell to get notified when I do the streams. I'll be trying to do them around the S&P close, but I'll never know. So 6 days a week for the next 3 months is what I am committing to. Looking to take Saturdays off and stream around 1 o'clock Mountain Standard Time, and we'll be doing my best to respond to questions from the live chat here on this show. And if I missed your question in the live chat, or if you're watching it afterwards, come on over to alphanalysis.io, and I'll just take one more second here to show you how to get to the forum. So you go to alphanalysis.io forums, come up here to register a free account. You don't even need to confirm the email. And if you click on emasar with Tyler Coates, you can then come in and comment on the daily live streams, ask any questions, and I will respond to that either in this thread or on future videos. So thank everybody very much for tuning in. I'm excited to resume the daily live streaming, and I hope that you all are going to get something out of it as the days go on. I'm hopeful that it will make more and more sense, and you'll start to see why I use what I use, and then where it may work for you, and where maybe you can improve upon what I have been doing. So this has been Tyler Coates with Alpha Analysis and the inaugural daily live stream, restarting since Sawcruhteez streams ended a while back. So thank you guys for tuning in. We will catch up with you next time.